The stock that was supposed to be number one of these 4 stocks that I had planned for this video, because I had this video planned for like over a day, was supposed to be a company named Celsius Holdings. Now, my hope was Celsius was going to be flat on the earnings or go down. That's what I was actually rooting for. Yeah, that's not happening. Celsius is up over 30%. With that being said, Celsius is still a buy, and it still has insane gains ahead for this stock. So even though it's up a ridiculous 30% plus after hours, it's still a buy. It's still a buy. Remember, this stock, not that long ago, I'm talking less than 12 months ago, this stock was $100 a share. So at $33 a share, it's still got a long mountain to climb to be back where it used to be. And do I think Celsius will be a $100 stock again? Yeah, I do believe Celsius will be a $100 stock again. I don't think it's happening this year, but I think it will happen in future years. Well, Celsius will get back to $100 and then eclipse that, right? So we're climbing that stock's climbing a mountain back. Now, so for some of us that have been just buying the stock very recently, we're looking really freaking good. Are we not? Are we looking good, right? No, as far as just their headlines right off the bat, they're flexing all over the place. Retail sales increased 22% year over year for the company. They grew market share 160 basis points, which is just a fancy way of saying 1.6%, right? To 11.8% they ended the year. Now, additionally, they announced this massive acquisition. Alani? I can never pronounce it right, okay? Alani. We're going to go with that, okay? And so they bought this energy drink brand, right? And we'll get into that in just a moment and some very, very interesting things I dug up in regards to this company, okay? So now in regards to Celsius's income statement, it sucked. But here's the thing. Everybody knew it was going to suck. This caught no one by surprise. No one that's investing in Celsius thought this was going to be a good report. We all knew this was going to be like a trough type garbage, income statement, and it's going to get better from here. And that's exactly the way I view it. 2025, the results that Celsius is going to be reporting is going to get better and better. Like Q1 is going to be the worst quarter for 2025, in my opinion, and then it's going to get better in Q2, better in Q3, and better in Q4. So the income statement sucked, but honestly, a lot of it came back to that Pepsi comp on a year-over-year basis, which was just brutal comp for them to go against, essentially, where Pepsi bought up way too much inventory at this time last year, right? But the important thing I thought was actually worth mentioning in regards to the income statement was they were able to grow their gross profit despite the revenue being down $15 million year over year. So what does that tell you? When the revenue turns back positive again on a year-over-year basis, which is probably as soon as, in the next quarter or two, we're going to see that gross profit explode to the upside. If they could grow gross profit while revenue went down $15 million, what do you think is going to happen when their revenue is going up $15 million and up $20 million and up $30 million? Watch that gross profit, baby. And that will obviously help the overall profitability of the business immensely, right? Additionally, when it came to that income statement, it had a bunch of kind of, things that affected the GAAP numbers, the generally accepted accounting principle numbers, that if you look on a non-GAAP basis, it's not as bad as it looks. Stock-based compensation was 5.9 mil. Foreign exchange was 1.3 mil hit. Legal settlement cost was a $54 million hit. Reorganization cost was around a $6 million hit. Acquisition cost was around $2 million hit. And then penalties was around 9.3 million, right? So their non-GAAP adjusted EBITDA margin was actually 18.9% versus 18.8%. So that is something worth mentioning there, okay? Now, this Alani company, Alani, we'll call him Alani, okay? So a lot of men have not really heard of this brand before, and the reason being is it's very popular with females specifically, right? It's a very heavy female energy drink base, okay? And I understand 90% of the people that watch my channel, you might be aware of this brand, you might not. But it was fascinating because I was kind of watching like what people were saying about Celsius on X after the announcement came out to buy this company for $1.8 billion. And everybody was like, on X, everybody's like, oh my gosh, worst management team ever. This is so stupid. How can they mess this up? Because initially the stock was going down. The stock went down to like either $23 or $22 after hours. And, a lot of these newbies in the market, they had no clue like how the stock market works, right? So they were getting all mad. Worst management team ever. And I'm like, like these people have no clue like what they're doing in the stock market. It's so sad, and they're just gambling money out there, right? And you know, if you understand anything, like you understand this is a damn actually really impressive management team at Celsius. Like 5-6 years ago, Celsius was a penny stock that no one cared about, right? And now they're growing this company into becoming a drink giant. It's unbelievable what they've been able to pull off at this company, like nothing but respect. But it's just funny, like watching people that aren't very educated on this. But if you want to get a little educated on this, go to your local Target, because I've seen this brand many times on the shelves at Target. Target always caters a little bit more to the female demographic, I feel like, than the male demographic. And you'll also find them in Walmart as well as some convenience stores. But Target, you're going to find heavy sections, and this is from a partnership they did. I believe it was this past year. They did a partnership with Kim Kardashian for a Kimade energy drink, essentially. And they'll do partnerships with a lot of different female creators and whatnot. But go to your local Target, and you're going to find the product on the shelf. And what's interesting is the product, guess where it always seems like it's right by? It's right by Celsius. Right by Celsius. Look at this, another picture. Look at this. Alani right there, Celsius right there. Alani, right there, Celsius right there. The product is right next to each other many times, right? But like I said, the difference between this brand and like Celsius is Celsius seems to be more of a 50-50 demo where, you know, it seems like about half the people that drink it are guys, half the people that drink it are females. Alani, a little bit different, where it seems to be extremely heavy, you know, really geared toward females overall, right? Now I was doing a little digging on this whole Alani situation, okay? Alani, I'm going to stick with Alani, okay? I did a little digging here, and here's something I found back from 2023 while I was doing some digging. So this is interesting. I posted this inside the private stock group. It said this company, a drink and snack maker, founded by personal trainer and social media influencer Katie Hearn, is exploring options that include full or partial sale of the company at a valuation of more than $3 billion. So that's interesting because that was back in the summer of 2023. They were exploring ideas of selling this company, but they were talking about a valuation of more than $3 billion. Celsius just paid $1.8 billion. So it looks to me like Celsius got about a 40% discount versus what they wanted to sell this company for a year and a half ago or so. That's, I think, pretty intriguing here, right? Now, I also found this here, and this was talking about, keep in mind this was a private company, so it's hard to find some of the financial information around this company, but I did find this. Back in 2021, it was announced, they must have let this out to the public, that they did $228 million of revenue. And that was a major growth rate from 2020. 2020's revenue was $68 million. So there's no doubt this is a very fast-growing brand. Now, word on the street, and I still have to confirm this, so do keep this in mind, but just word on the street is this company's been doing close to $600 million of revenue now, which is not a small number. It's actually a very impressive number for this company, considering, you know, just back in 2020, they were doing $68 million. So if this is true that this company's been doing, you know, recently around $600 million of revenue, that's incredible. That's like a 10x on revenue in a matter of a few years. That's not bad, right? Not bad at all. So this is actually a really, really interesting acquisition they're pulling off here, essentially, right? Now, if you know what I've been up to here, I've been buying Celsius and Monster stock, and I've basically been putting about $2 for every dollar I put into Monster, right? I put into Celsius. And as of tomorrow, so we were up $1,500 on Celsius going into these earnings, but as of tomorrow, we'll probably be up $30,000 to $50,000 is my guess, depending upon how much Celsius stock goes up tomorrow, right? But what's really fascinating here is since I own Celsius and Monster, I'm going to now own Celsius brand, this Alani brand, Monster, Rain Energy, Bang Energy, and plus Monster owns a bunch of other like smaller brands essentially. So the way I kind of think about this now is basically almost every other time somebody walks into a Target, a Walmart, a convenience store, a food store, and goes to buy an energy drink, I'm going to be making money off that. That's crazy. That's crazy, right? But if you add up the market share that Celsius has, this Alani company has, Monster has, between all their different brands, it adds up to basically about half the time an energy drink gets purchased, I'm going to make money off that. That's wild to think, right? So, I guess the only enemy is Red Bull in the end, right? But that's incredible to think like that, right? Now, the other thing you got to think about with a deal like this, and something I consider, is why didn't Monster, Pepsi, or Coca-Cola go ahead and, buy this brand? It was for sale, and it was for sale potentially for quite a while, right? Why did they not buy it? So when it comes to Monster, I think Monster probably didn't want to buy them because, well, one is Monster already has so many different brands they already have to worry about, right? But I think another reason is Monster is not super strong when it comes to like the fitness community. Monster is much more heavy into, I would say, kind of like the worker community and, folks that might be looking to go out or things like that, right? And so I always felt like that's kind of Monster's strength, is kind of a little bit more there, where Celsius' strength is more the fitness market and kind of like lifestyle, right? Which is also this Alani brand is as well. Now, additionally, this Alani brand, right, is very heavy female demographic. And if you think about Monster traditionally, what do we think about? Like very heavy male demographic. Like if I think about who's drinking a Monster, like I get a mental picture of the guy playing Call of Duty Black Ops 6, okay? I get a mental picture of the landscaper who was coming in and buying 2 Monsters at a time when I was working at Quick Trip, right? And the next landscaper, and the next landscaper. And I get a mental picture of the construction worker who's coming in to buy a Monster. That's a very different picture than somebody I imagine buying a Celsius. And it's certainly a very different person than I imagine buying an Alani, right? So I think Monster might have just kind of looked at it as like, hey, this is not our strength. Like we sponsor like UFC fights. Like we sponsor monster truck rallies and like dirt bike races and stuff like that, right? And like we'll sponsor, I don't know, a skateboard competition and a BMX competition. Like that's Monster. That's where they play. So the brand probably just didn't line up super well with them. That's kind of my opinion on that. As far as Coke goes, I don't think Coke would want to just own that brand straight up because they have their major investment in Monster. So they would probably look at Monster and be like, if you guys aren't going to buy it, we're not going to buy it. Like, because we would want you guys to run it. Because Monster or Coca-Cola owns a significant portion of Monster. I believe Coke owns around 22% of Monster nowadays, or somewhere around there, roughly, right? And so I don't think Coke would just want to stand alone buy them and be like, we're going to run this energy drink brand when your guys are our energy drink company. Like, it doesn't make sense. Pepsi has the ownership stake. They own, if I recall, it's a little under 10% of Celsius, right? And so I don't think Pepsi would want to buy that brand straight up when they would say, why not you buy Celsius? Like, you guys know how to target more of the fitness, lifestyle type consumers. You guys know how to sell to females really well, right? Like, you guys can handle that, right? And so at the end of the day, like, I just don't think it lined up very well for these other 3 big brands. And there's Celsius right there. And I think it was just kind of a perfect scoop up for them. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Celsius Holdings. Celsius is an energy drink company. This stock has basically gone almost nowhere in over 4 years now at this point in time. Like if you go back 4+ years ago, the stock was right around $20. And here today, you can pick up shares for right around $20. Now, this one's a pair investment for me, meaning essentially I'm not only buying Celsius stock right now, but I'm buying another stock that's very similar. And the reason being is it's kind of a hedge. Just in case I'm wrong on Celsius, the other stock will do very well. And it's a 2 for $1, basically pair investment. So for every $2 I put into Celsius, I put $1 into this other stock. The other stock is Monster Beverage. So for every $2 I put into Celsius, $1 goes into Monster essentially. Now Celsius plus Monster plus Bang Energy plus Rain Energy, because you got to understand Monster owns Bang Energy. They also own Rain Energy as well, right? I mean, you go down the energy drink aisle at your local food store or Target or Walmart or wherever you go, right? And go look at the aisle, and you're going to see you're going to control like a massive amount of the market share of energy drinks in total, right? Red Bull's obviously always a giant in this space and has been a giant for 20+ years now at this point in time. But you have Celsius, which has been the fast growing brand over the last few years. And then you get Monster stability in their brands between them, Bang Energy, Rain Energy. And by the way, Bang Energy has been coming back strong for Monster recently, right? Now, Celsius, the interesting thing is, you really are starting to, especially if you live in the United States, right? Celsius is really starting to become a big dog drink company. Like it's being right in front of you, like literally right in front of you, right? You go into your local Target or Walmart or, even pharmacy chains and food stores and things like that. And like Celsius is starting to become a big dog in the space. But the difference is they don't have a big dog market cap on this one. The market capitalization of Celsius, because the stock has crashed so insane, is around $5 billion for the entire company now at this point in time, right? And to put that into some reference of where big dog beast drink companies, where their market caps are, Coca-Cola, for instance, is $278 billion market cap. PepsiCo, $197 billion market cap. Anheuser-Busch, around $100 billion market cap. Monster, $46 billion market cap. Keurig Dr. Pepper, $41 billion market cap. So I'm just showing you this so you understand there's a long game ahead for Celsius to climb and become one of these sorts of drink giants, right? But it feels pretty good to be buying both of these stocks because I just am going to have such a kind of, I guess when you say a grip on the energy drink industry overall, right? Now, here's the kind of latest, we can call it market share numbers from these drink makers, right? And this is out of a company that tracks all of this market share related stuff, right? So what we're going to see is Monster recently had around 27.5% market share. Celsius has climbed to about almost 12% market share. And keep in mind, you go back a few years ago, like Celsius was a 1, go back 5, 6, 7 years ago, Celsius had maybe 1% of the market share in the drink space. Like they've grown massively, right? Now they have double-digit percentage of the energy drink sector, and that's huge, at least in North America, right? They got a long way to go international. Now, Red Bull also peaked in regards to their market share way back here toward the end of 2022 at about 39.2%, and they've dropped to about 36.6% now at this point in time, right? Now, here's a good way of kind of understanding what's going on with Celsius, why the stock, it fell off a cliff, why it turned into a falling knife, and, why it's a great opportunity here. If you look, Celsius, as far as all other customers, and then Costco, made up a great deal of their revenue. But then Pepsi invested into Celsius and bought a major ownership position in Celsius Corporation, very similar to what Coca-Cola did with Monster many, many, many years ago now at this point in time. Now, I think there's very, very intelligent investment for Pepsi because they don't really have a dominant, they don't have a dominant play in the energy drink space. And so for them making this investment into Celsius, it allows them to get a major investment in the energy drink space, no different than Coca-Cola has a major investment in the energy drink space, right? So they made that major investment, and then they just went crazy with distribution. I mean, obviously, Celsius is now a big brand in all the big stores, right? And that's one of the great powers of having Pepsi behind you. But the issue with that is Pepsi got bloated with inventory. They bought up way too much inventory, and now Celsius has had to work through that inventory and is still working through that inventory. And you're going to see that over the next, we can call it quarter or so, essentially, right? And then we're going to see inventory kind of normalize here at the front half of 2025, and then it'll start to go up again, at least in my opinion, right? And, we'll see that from Costco and the other side of the business as well. But it was a whole situation the company had to work through, right? Now, what do I need to make a lot of money over the next 3 to 5 years in this pair investment? One is I need the energy drink TAM to grow. Do I have any doubts about the energy drinks sector growing over the next, 3 to 5 years? Not really. Like energy drinks, if anything, I see them getting more popular. A pretty addictive product overall, and people really like energy drinks. Some people are partial to Red Bull, some people are partial to Monster, some people are partial to, Bang Energy, Rain Energy, some people are partial to Celsius. But the moral of the story is the energy drink space is likely going to continue to grow bigger and bigger. Additionally, I need Celsius to continue to capture 10 to 15% market share in the United States. I don't need Celsius to beat Red Bull. I don't, right? If they just had 10 to 15% market share in the United States long term, I'm going to do pretty well with this investment, given how small the market capitalization is for Celsius. Additionally, I need Monster to continue to have around 30% market share in the United States, right? I also need Monster to continue international expansion. Monster has really been expanding international, really, I would say heavy over the past 10 years. I need that to continue. Additionally, Celsius is very early days as far as their international opportunity. So I need their international business to essentially become bigger than their US business in 5 years. Do I think that's a possibility? I think that's I would be disappointed if it doesn't. There's just so many more consumers to reach outside the United States than inside the United States with energy drink products like this. Like Celsius, no doubt, if we fast forward 5 years from now, their international business should be far bigger than their North American business overall, right? Now, I also need both companies to do share buybacks. I would say it's more important for Monster, though. Monster's way more mature company than Celsius. Celsius is focused a little more around growth. Monster's got to focus a little bit more on capital return, which means big share buybacks year after year. I should see Monster taking off massive amounts of shares year after year after year. But I wouldn't mind Celsius to do it as well. It's just Monster, it's a little more important, okay? So Celsius, Monster, I like it as a pair investment right now. I think it's a pretty good opportunity here, if not great opportunity. And, we'll see how it all plays out over this next few years. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Cheesecake Factory. Oh my gosh. Is this story getting better and better by the days? Oh, it's getting so good, folks. Now we're at $45,000 in the stock. Does not include dividends. And I'm telling you, I got so much more money to make in the stock. It's ridiculous. This is one of the most underlooked opportunities in the stock market. I understand the stock will be approaching all-time highs here very soon, but even when it does hit all-time highs and breaks through those all-time highs, I'm telling you, the stock is still a deal. Their income statement was an A- income statement, $920 million of revenue versus $877. They kept all their costs in check. Almost all their line items for costs, other than G&A, pretty much went down on a year-over-year basis, right? Food and beverage costs and labor expense, like as a restaurant chain, that's where you spend your money. Food and beverage and your labor, right? And both of those dropped as a percent of revenue. Very impressive. Additionally, if you look at their income from operations, it went to 5.1%. Whew, that's versus 0.9%. That's a really good margin for a restaurant chain. Additionally, net income went to 4.5% of revenue. That's impressive. So a 4.5% net margin, $41 million plus of net income here in the quarter, and 83 cents of diluted EPS. Very strong quarter for Cheesecake, and it just gets better and better and better. Now, additionally, I was pointing out this in my private stock group. I said, Cheesecake's got 215 restaurants, owned restaurants. North Tally's got 42 so far, Other FRC 48, and then Other is 43, which definitely incorporates into the Flower Child, right? But something that's crazy, when you listen at a conference call, they were talking about like 11% Flower Child comps. That's ridiculous. Like, it's hard to find anybody else other than like Cava that's got a brand that is growing comps 10% plus. It's ridiculous. And that's what Flower Child's doing right now. So this I'm telling people, like, this Flower Child opportunity might end up being bigger than anything the company has right now. And that includes Cheesecake Factory. And that includes North Italia. And that includes all the other concepts they have that they're going to be growing immensely over the coming years. Like, Flower Child might be bigger than the whole company. I'm not joking. Like, what I'm seeing there is shocking. 11% comps year over year. These are crazy numbers. And the craziest thing with the Flower Child business is how profitable it's likely going to end up being long term, because it does crazy to-go business. We're talking like half the business is to-go, roughly, is what they were mentioning. It's not a small number. It's a massive number, like significant. And it's a perfect brand that's set up well for Uber Eats and DoorDash, right, and Grubhub and all those. And right now they're not even using many of those. The only one I believe they're using as of right now is, I believe right now they're exclusively using DoorDash. But I wouldn't be surprised if Flower Child expands to all the delivery platforms over time. And when that does, like, I'm telling you guys, this Flower Child brand is no joke. Like, if you want to look for like the next Chipotle, the next Cava type opportunity, keep an eye on Flower Child, okay? Now, the company also mentioned they're going to open as many as 25 new restaurants in fiscal 2025, including 3 to 4 Cheesecake Factory restaurants, 6 to 7 North Italia, 6 to 7 Flower Childs, and as many as 8 to 9 FRC concepts. They also have $84 million of cash. My thing is, and I'll be honest with you, if I had one thing to pick at the management team, if I had one thing, we need to expand Flower Child faster. This management team has to get very focused on expanding Flower Child specifically at a much greater rate. I'm talking, we've got to get to a place. I want to see them open 25 Flower Childs alone in 2026. I think the management team has to fundamentally relook at Flower Child and how crazy big this opportunity is with Flower Child concepts specifically, with these 11% comps, and be like, we got to hit here. Let's put max resources behind this. I am to such an extreme extent, I wouldn't mind if they cut the dividend completely just to expand Flower Child as quickly as possible. This is such a massive opportunity for the company. I don't want them to move slow here. We need to move fast. And so, if you told me I got a half hour to talk with the management team, that's the only thing I would tell them. I'd say 6 to 7 Flower Childs in 2025, fine. But I'm talking future years. I want to see 25 Flower Childs a year alone. We can do it. The team can do it. I think they can pull it off. But they gotta accelerate growth massively when it comes to Flower Child, and put a lot of resources, as many resources as possible. Because I'm telling you, that's the biggest opportunity in probably the quick casual space, probably since Chipotle and Cava. Like, it's behind those ones. It's a big opportunity, right? I would anybody that wants, either owns Cheesecake stock or cares anything about it, listen to the conference call. The conference call is phenomenal. It'll give you so much valuable information. We have it up on 1000xstocks.com, and you can adjust the speed if you want to listen to it at 1.5x or 2x speed or whatever. Listen to the conference call. It was a great conference call.